Our conditions shifting to mildly bearish in this bull market. Bull market rank sitting at 26.30. That's been flattening out now for essentially most of the summer and fall. You can see that number was right around 25 here back in June and July, and still sitting right around that number as prices have been quite volatile here in the last few months as well here in the short term. As of now, we're seeing buy-sell ratio sitting at 0.76, so less than 1. That pullback in S&P 500 and the market on Friday gave us that crossover. Bears now gaining some control, some momentum to the downside. We're seeing sentiment shifting off of those extreme levels up in 94. That's a pretty common area for a retracement. They just don't stay in that upper level. That's 94 here. You can see 89 here. Here's 91 at these levels. So a pullback now, looking for some support here in the market. Let's take a look at S&P 500 and see we do have a support level currently right at this range, this 586 level on SPY, starting to get a little bit of a trend shift here. That's why it's moved to mildly bearish, because we're starting to weaken right here at the top end of the trend. So starting to roll back down. Now we could get some support right here to continue this trend, or it could start to break down some of these levels. We could get down to that 578 level on SPY and still be maintaining that overall uptrend. But again, the location of where we're at currently in this trend, the fact that we are at the upper ranges, this is a 20-year chart, we're at the top end of all of these ranges, momentum at the top end of all of these ranges, and watching for just additional confirmation to this direction. So we may see this presidential rally starting to fade right here. We're seeing bonds continuing to have weakness. SHY, the short end of that bond yield curve, continuing to trade lower, which means interest rates are still high and maintaining that level, even though the short-term Fed funds rate has been cutting. The bond market has not been doing so. TLT also in that downtrend. Now some support right here around this current level, this most recent low back in May. Could find some support here in bonds. We'll see how that plays out. Let's take a look at sectors. We're seeing some mixture again to the bearish side. Oops, that's commodities. Let's jump over one more. And we've got more and more of these stocks now shifting from this buy zone into this hold and sell zone. So this is a good example of that mildly bearish condition in the market, where we're just not getting all sectors participating, and we're getting more and more sectors starting to either a transition into a different trend or moving into that bearish trend. So some areas of at least caution at these levels for risk management. We're seeing commodities continue to be weak. Gold pulling back almost to that 50% retracement, 234 on GLD. SLV, which is silver, the ETF for silver. Again, everything we focus on are all ETFs, which are all tradable. So you can utilize any of those, anything we've discussed in a portfolio. These are still to that downside 618 potential retracement area, that $27 range on SLV. If we jump over to the muscle stocks group, not a whole lot in that new buy list, just because we are seeing that downturn. Didn't see a whole lot of stocks moving to that upside. A couple to consider: FTEL in the fitness space, a nice confirmation move, that pullback bouncing. It's still in that 6-month downtrend versus the uptrend, meaning it's connecting still to these 2 points, even though it's starting to gain momentum this direction. You can go out one time frame, maybe look at that 1-year time frame to give a little bit different context. We are in this longer term uptrend here. On that 1-year time frame, it retraced really deeply all the way back into this 618 zone and is now starting to gain momentum back up into that momentum zone above 236, and a massive bar there, 28%. Let's see where volume was. Also is a spike in volume. So interesting pattern here on FTEL for today to consider. And then also DESP, another stock having a big gap, big volume, 16% in that transportation space. Move to extreme. When they move to extreme, often in gap, they will pause for a little bit, but sometimes you can get that continuation and be watching for sometimes those gaps, particularly if they're big percentages moving away from a potential stop location, which is going to be down under these lows for that initial risk management. That'll do it for today's update. Everyone have a fantastic day today.